Good morning and welcome everyone. My name's Amy French, head of Level 39, and it's my pleasure to welcome you all to this virtual event this morning. Ethical Investing and Responsible Capital, Building a Purpose-Led Tech Ecosystem. And a special welcome to my panelists who we'll welcome to the stage shortly. Dharma Sathianathan, partner at Bethnal Green Ventures, Sam Duncan, CEO and founder of Net Purpose, and Martin Gettings, head of sustainability at Canary Wharf Group. Today's panel will discuss ethical investing and responsible capital and the opportunities and challenges we face pushing forward the broader ESG agenda. Ethical investing is not a new concept, but as London holds one of the deepest pools of impact funding anywhere in the world, and with issues of climate change, deforestation, and carbon emissions strengthening in their urgency, there's been much accelerated need for organisations to reflect the deep concern held by many on the future of our environment. The COVID-19 pandemic has furthermore added an additional layer of importance. A reminder of the vulnerability of millions to natural events and a hopeful recognition that businesses, people and societies are far more adaptable than we had previously believed when the stakes are so high. From ESG investing to scaling innovative companies that will solve the world's greatest challenges, this panel session will bring together those that can offer insights into the risks, challenges and opportunities for responsible capital and the entrepreneurs that will create a better future for the planet and its people. Before we do introductions and get started, a quick reminder of the format this morning. This will be a 45-minute panel session followed by a 15-minute Q&A from the audience. So please do share questions throughout the discussion using the Q&A tab on the right-hand side, and we'll come to all of those at the end. There is also virtual networking at the end too, so please do feel free to stick around for that. But with that, I'd now like to invite our guests to the virtual stage. Welcome Dharma, Sam and Martin.
Hello.
Fantastic. Thank you all for joining us today. Can you hear me? You can? We're all here? Fantastic.
Yes.
Great. I'd love each of you to briefly introduce yourselves to our audience. Sam, would you like to start?
Fabulous. Yes. Hi, everyone. I'm Sam, founder and CEO of Net Purpose. We are essentially the world's first dedicated data provider for this new generation of investors with purpose, as we say. We provide data on the social and environmental outcomes of companies and investment portfolios to large asset managers so they can measure the impact of their investment portfolios. And prior to founding Net Purpose, I was head of impact at Leapfrog Investments, an impact investor in emerging markets, providing access to financial services and healthcare. And then prior, I started my career at Goldman Sachs as an investment banker. So I've seen the kind of journey that this financial system has been through.
Brilliant. Thanks, Sam. Dharma?
Yeah, hi everyone. My full name is actually Dsi Index, but that's almost the entire alphabet. So Dharma. I'm one of the partners at Bethnal Green Ventures, which is an early stage tech for good VC. Tech for good being any technology that uses, well, we back really amazing teams who use technology to tackle the world's pressing social and environmental challenges, and really do believe that you don't have to forfeit any profit when you want to make an impact in the world as well. And we've sort of been investing since 2012 at the relatively early stage. When we mean early stage, it's sort of pre-seed to seed, so when companies are just building their products and services, and our expertise is really helping them to grow and launch their businesses effectively and bring them to scale. We are a B Corp as well, so we can definitely sort of tap into what that means in the sort of world of responsible and sustainable investing, especially with the sort of value add as an investor to our wider stakeholder community. And prior to joining B2B in 2017, we've got a bit of an unusual sort of VC journey as well. I used to work for international NGOs in the sort of humanitarian global development capacities. So if you ever need to know how to survive a grenade, I can tell you.
Thanks, Dharma. And Martin.
Good morning, everyone. My name's Martin Gettings. I'm Director of Sustainability here at Canary Wharf Group. I started life as a Lego kid, really just couldn't do enough with Lego, but I didn't have a lot of Lego because, 30 odd years ago, Lego was probably even more expensive than it is now. So I learned to do quite a lot with quite a little. And I guess that's why I was destined to go into construction, but also into sustainability. So the first sort of 15 years of my career, I gave myself a fright about a year or so ago when I realized I'd been at work for over 30 years. But when I looked at that 30 years, the first 15 was spent working in construction and doing project management and site engineering and all of that great stuff, learning how to deliver these amazing projects. And then I realized that something had to be done about the way we did things. So I moved into environmental management. So the last sort of 15 years, I've been doing environmental management and corporate sustainability leadership. Currently leading the strategy for sustainability here at Canary Wharf Group, where we are engaged with our tenants, our suppliers, and our whole community in driving this this thing called ESG forward. For me, the big word is alignment, right? That's what I've done in my career, and I think that's the way to tackle ESG, is to align it with what we're doing in our day jobs. And if we can work out how to do that, that's the pathway to sustainability from my perspective. So great, very pleased to be here. Thank you.
Wonderful. Thanks, Martin. Thank you all for joining us today. It's fantastic to have you all. So I'd like to kick off by taking a look back over the last year and the impact on the sustainability agenda. So Martin, why don't we start with you? In your view, has the COVID-19 pandemic shifted organizations perceive sustainability and corporate responsibility?
I've got to say, I don't think that the pandemic has shifted organizations' thinking. I think it's shifted the whole world's thinking. It's shifted everybody's thinking on sustainability. We've all seen clearer, cleaner blue skies, and we like it. We want more of it. And as a sustainability practitioner, that's a good thing to come out of what's happened. But of course, leading organizations like mine, like Canary Wharf Group, have always had corporate responsibility front and center. It might have been called something different 30 years ago, but the whole purpose of Canary Wharf is built on that principle of efficiency, community involvement, ethics. That's what's founded the estate that we're on today. But certainly the last 12 months, or probably a little bit longer than 12 months, has absolutely raised the awareness, and that has meant that there is now a market shift towards this, which is absolutely brilliant. It's long overdue, and I would say this, I oftentimes, when you're meeting people and you're saying hello, and you get how are you doing at the moment, and I kind of say absolutely busy, and I guess if you're in ESG and sustainability right now, and if your answer to that question isn't busy and flat out, then you're absolutely doing something wrong. So it's a busy time at the moment because of this pandemic.
Dharma, what are your thoughts, and what would you say are the kind of core reasons behind any shift?
Yeah, I think adding on to what Martin has said, there's definitely been perceived sort of shifts in consumer demand, especially when it comes to more ethical and purpose-driven businesses as well. And obviously the sort of pandemic has definitely caused a lot of people to adapt their sort of behaviors to online consumption as well. So it is a lot easier and visible to sort of find these purpose-driven brands as well, especially with sort of definite B Corp directories, if you're familiar with B Corps already, and others. But likewise, we've seen a sort of significant shift with LPs as well, and that's also evidenced by Atomical's State of European Tech report, for example, that actually suggests that more and more LPs, so limited partners who actually fund the sort of VC firms in this space, actually actively want their portfolio companies and the funds they invest in to report on ESG or sustainability ratings as well. And that sort of goes beyond their usual remit, and it's actually good that the pressure is coming from the top down as well, because it also means that a lot of VC firms at the moment are shifting their sort of agenda to ensure that there's a due diligence process in place when they make investment decisions that looks at diversity and inclusion, that looks at equal and fair pay across their employees at all the various stages of a startup's life journey, which is really, really promising. At the same time, it's just incredibly hard to find the right set of metrics as well, and that sort of is translated into different initiatives that have popped up recently. One that is led by Hoxton Street Ventures and GMG Ventures, for example, is very collaborative and also includes a whole investor network across Europe to actually shape what type of metrics you want to include into that due diligence process. At the same time, there's also another framework being developed in the UK that is led by yet another VC. So there's still a lot of siloed work going on in the space. But it is very positive to see that more and more people are just aware that they just want to invest in good businesses, regardless of whether they're impact driven or not.
And do you think this is a permanent shift or a more temporary one?
I'm hoping it's a permanent one. It is still debatable, sort of, especially in line with what sort of investments have reached $1 billion valuation during COVID as well, whether it is going to be a permanent shift. I mean, we can argue all day long whether Hopin and Gorillas in Germany that just reached $1 billion valuation after 7 months of existence, if they actually have the sort of processes in place that guarantee that they are sustainable and good companies as well. I'm not saying they aren't, but there have been issues of workers' rights in both examples. So it sort of begs the question if that is sort of catching up with the investors who have bigger pockets of money available. But I'm hoping it's permanent, and I'm hoping that more mainstream investors are adapting to this type of investing as well.
Absolutely. And Sam, what sector of the economy do you see as kind of building back sustainably most seriously?
Interesting. What sector of the economy is building back sustainably? Well, I mean, I think I would, just to comment on the kind of broader trend, I would say this is definitely here to stay. And I feel like the COVID pandemic has been more an acceleration than a shift, I would say. I think this has been coming for a very long time. I mean, I've been in this industry now for 15 years, and I think it started in the financial crisis of 2008, 2009, when there was a lot of ethical concerns around big banks profiting on, the back of the mortgage crisis and Wall Street protests and everything, which is more a social concern. And when you have climate added to the agenda, and now demonstrable evidence that non-financial factors like a COVID pandemic impact financial factors very significantly and also impact ways of life. It's just like an acceleration of things that I think as an investor, if you're managing a portfolio of cash basically and money, and you're trying to put it in the places of the future, but also generate a return, you can't ignore those trends basically. As for sectors, I mean, we kind of work across sectors. So I have to say we don't have sectors in themselves play very different roles in society and have different social and environmental impacts. We work for the largest institutional investors, really, who are trying to invest their portfolios, like billions of dollars, if not trillions, in sustainable, responsible, and impactful solutions. And they put that capital across a host of sectors. So in healthcare, we look at things like patients treated with what diseases and how high the efficacy is for the individual treatments investors are backing. In climate, we're looking across industries, really, in the energy sector and their transition to renewable power generation from, fossil fuel-based fuel. We're also looking at sustainable food, like Beyond Meat burger versus beef burgers, for example, which has a climate impact. And then take that into other, just energy efficiency improvements in every single sector that has an impact on climate, given the state of the grid. I have to say, I don't have a view on what is more impactful today. And I think actually the foundation that we're trying to build is a data set that helps us make that conclusion over time. But as Dharma said, we are a little bit cleaning up a wild, wild west of sustainability accounting at the moment, with lots of different standards, and trying to put all the information in one place so we can make those types of conclusions.
Brilliant. It was so interesting to see those examples of sectors you work with as well, and how they're all kind of making their different impacts. Dharma, coming back to you, you mentioned that, you know, Bethnal Green Ventures, you work with a number of incredible companies developing technology to solve a lot of global problems. How is technology helping us make the world a more sustainable place?
Yeah, I love that question. I do always want to caveat this question about what is the potential of technology to solve the biggest problems in the world, with the fact that tech is neither good nor bad, and it's definitely not neutral. So it's always quite critical to sort of see how tech is being developed, who is actually developing the technology, and who is this meant to serve as well, right? Because if a product is not diverse by design, it will be unequal in outcome. And we've seen so many examples of AI and facial recognition actually having creating huge disparities for, let's say, the Black communities, and anyone who is sort of underrepresented. But in retrospect, if you do intentionally and with the sort of right basics, build technologies, products and services that are geared towards positive outcomes as well, and you have an open and transparent process about how you're building these, and also want to commercialize them in order to keep them in a sort of sustainable fashion, and keep them running for a long, long time, there is huge potential to sort of plug a lot of the pressing problems that we're facing at the moment, and that have been exacerbated by COVID-19. So what is the potential of technology when it comes to helping precarious workers shape a fairer future of work? Are there any possibilities to actually use technology, for example, to expose really severe human rights violations in the workplace? There are some really great examples in our portfolio. Organize a platform that helps predominantly low-income workers actually campaign for fairer working conditions. We've had huge success stories during the COVID crisis as well. So they have they've gone from 80,000 members at the start of COVID to 1.2 million just in the last couple of weeks, which has sort of, with this sort of massive surge in membership as well, they've just been able to spotlight a lot of the workers' rights violations that have occurred in Amazon warehouses, in delivery services, for precarious workers in supermarkets as well, to actually provide them with the right PPE equipment for their own safety as well during the crisis. So there is like huge potential in that particular domain. But then we've seen a lot more investment going into climate tech, for example. There's been a surge in the past 5 years, apparently, in investment into the space by 3,500%, which is incredible. But there's definitely sort of technologies being developed that help with sort of mitigating a lot of the harms that are the results of climate change, to be fair. Looking into disaster risk responses in countries where extreme weather conditions happen quite regularly, so like floods and earthquakes, and really working with local communities, for example, to enable them to just have rapid responses ready, for example, which is hugely inspiring. So there are loads and loads of possibilities for tech in this space. And we see incredible ideas coming through at a really early stage, where people are just trying to grapple what that might look like and if it's actually going to be adopted as well. So yeah, that's just a really exciting space.
Brilliant. And Martin, what's your experience with kind of technology enabling and supporting sustainability?
I really loved what Sam said about getting rid of the cowboys in sustainability accounting. You're right, we do need to do that, but we also need to get rid of the cowboys who are burning things and consuming things. That's the area where we need to address the impact. I think the sustainability accounting world will sort itself out. There are a plethora of different mechanisms, but really, where's the focus here? You know, from me, I'm a sort of climate I'm a climate activist. You know, that's the area that we want to focus in. You know, what does a zero carbon world look like, and how can we plot the course to that, and how can we enable and activate the technology that's going to help us get there? Now, I've got to say, it isn't just all going to be about technology. It's going to be about a whole range of things. It's going to be about behavior change. It's going to be about the way we change consumption, the lifestyles that we're going to have to change. You know, we're going to have to move away from meat a little bit more and look at some different products. But again, I'll say it again, it's all about alignment. If we can start realigning the way we think about these things and utilizing the tools that are available, that will help us drive and find new tools and new technology. That's what I'd like to see. That's what I get excited about, and I get excited at the fact that, like today, we've come together with finance, with sustainability, with technology. It's these things that need to come together, that need to sort of help drive us to get us to the place that we want to be. And I just want to pick up on a previous question, Amy, that you mentioned. You know, you were asking the question about which sector is looking at building back more sustainable. Any opportunity I get to share this with other people, I do. My professional institution, IEMA, the Institute of Environmental Management and Assessment, have actually taken the phrase "build back better," and they've defined what that means to deliver a sustainable world. So I would urge everybody, because it's not just for environmental professionals, this is for everybody. I would urge everybody to take a look at the IEMA definition of "build back better," because you can apply that in any context. It has 5 steps that we go through: vision and leadership, empowerment, placemaking, ESG investment, and collaboration. And if you put those together, you've got a roadmap to actually deliver that politician soundbite, build back better. And for me, that's what this is all about. It's about coming up with real, tangible solutions, to get us to where we need to be.
Fantastic. Well, I'd now like to you mentioned kind of the investment side. I'd now like to focus on the investment landscape in particular and what's happening in London. So London holds one of the deepest pools of impact funding globally. Sam, why is this the case, and how do we ensure that we can continue being a leader in the space?
So this is an interesting one, because Amy, I didn't know that statistic before I joined this panel. And I have to say, based on our clients and even Leapfrog's kind of journey raising funding for impact investment, London wasn't, the most prominent source of capital for us. It was really Europe, outside the UK, and the US, actually, which is an interesting statistic in itself. But why is London, if that's the case, the kind of really deep hub of impact capital? I think Europe in itself is certainly a leader. The way that we think here, and I can't say I can kind of, because I've lived here for a long time, but I'm Australian. So coming from a British mother, I guess for some affiliation to the UK, but call myself a diaspora. I think Europe, though, in general, orientation towards the social underpinnings of the public healthcare system and, general cultural orientation towards more sustainable business and consciousness of the environment and things like that is definitely more present here, having also lived a number of years in the US, than it is necessarily in the US. But I have to say, beyond that, that kind of innate cultural orientation, I couldn't tell you exactly why London is the biggest hub of impact capital. But I do know that certainly with what we see is where this is really coming from are the asset owners, which fall into a couple of different categories just for the landscape of investment. Money really sits with high net worth individuals today, with pension funds, with other sovereign wealth funds and other players. And I do think this shift around asset owners, pension funds needing to invest their money in a way that achieves the world that their pension fund members want to live in 20 to 50 years. And the high net worth pool of capital that is being passed from one generation to another. You have a lot of people that want to put that money in a good place and to use it to achieve global goals. And in my, 15 years working in this space, those are the kind of key 2 drivers of where this momentum is coming from. It's asset owners asking their investment managers to please put my money in a place that will help us achieve global goals, and do it well, basically.
Brilliant. Dharma, what do you think?
Yeah, I can definitely jump in here. The sort of statistic comes from a really great report, a really great research report from Nesta called the Dsi Index. So it's a whole mapping exercise of actually a European project with EU funding that looked into 60 cities across Europe for their sort of potential to incubate, grow tech for good and digital social innovation. And from that ranking, it became quite clear. It looked into different sort of aspects around sort of the availability of funding, skills, civil society, collaboration, infrastructure, and diversity and inclusion. And from all of the indicators they had, London came out top because it has such a great sort of enabling environment for funders to invest into impact-driven startups and what we dub tech for good or impact tech nowadays, or purpose-driven tech companies. But also the collaboration that exists in the space, because tech for good sort of took a really critical role after the financial crisis. So starting with the Tech for Good meetup community, for example, that now boasts nearly 10,000 members, is a really great platform for more collaboration to happen between civil society members as well as startups, government, academia. So it's just a really great enabling environment that's just been created, and that's due to how London exists as a place as well. You have all of the main branches of government in one city, as opposed to quite a lot of the capitals in other countries as well. So that just in and of itself creates such a great environment to be able to innovate across all of those different branches as well. The other thing why there's such an emphasis on London fairly recently as well, there have just been a lot more initiatives that have also come from the Mayor of London with the sort of Civic Innovation Challenge that started 3 years ago, and a lot more funding availability and sort of interest into the impact tech space or the tech for good space as well. So Bethnal Green Ventures is definitely not the only investor. There's more and more investors emerging with their sort of headquarters in London now, but being operational across Europe as well, which is very, very fascinating, who sort of help startups at a very early stage, because the critical part that's traditionally been missing and still is largely unfilled is that we need more early stage investment to create more pathways for more diverse and underrepresented funders as well, to actually be able to create tech for good products and services. So yeah, it's a great sort of environment, and definitely worthwhile joining all of the different tech for good communities as well. There's a meetup coming up tomorrow, so worthwhile coming along.
And Dharma, from a kind of investor perspective, why are investors increasingly wanting to use more impactful investment models?
I think to a large extent, that's also what Sam has already mentioned, that asset owners themselves are sort of indicating more interest to actually, especially pension providers, because it's a huge mandate that pension providers have to actually invest into more sustainable and impact-driven investment opportunies. But the Sizing the Market study from the Global Investment GIIN. I have no idea what the
Impact Investing Network.
Exactly, that one. That one particularly spoke about in the last 5 years, the number of family offices, for example, has doubled who have adopted impact strategies in their investment decisions, which basically also indicates that there might have been more a generational sort of wealth exchange. A lot more millennials and Gen Zs are actively looking to put their money where their mouth is. And that's been an increasing trend as well, to sort of seeing more of that generation of wealth being, driven into purpose-driven businesses as well.
Yeah, and sorry, just to add on that, can I, Amy?
Yeah, of course.
On that one, I think that's also where, so appreciate your thoughts, Dharma, actually. Very interesting too on that Tech for Good hub of London, which I totally agree with, and I can totally see that. And I guess there we're talking about like early stage innovation, venture capital investment, etc. And the study you're talking about with the Global Impact Investing Network looks at that at the early stage investment market, but also looks beyond private markets, listed markets. And in terms of where the world's capital is, and we're kind of the belief that the entirety of capitalism needs to evolve, right? Like we need to change the code to not just optimize for profit, but also for purpose. Most of that capital sits not in VC, in larger company investment, listed markets, fixed income, private markets, etc., private equity. And I think that's where there's a lot of movement from large institutional investors in London and outside of London around the world, all represented at the Global Impact Investing Network, which is hubbed in New York, and I think increasingly has a presence here in the UK as well.
Fantastic. And so coming to Martin, what's your view on how technology is enabling responsible investing?
I think we've touched on it. I think that the measuring piece and the leveling of that playing field is somewhere that absolutely needs to be addressed. We've got, as you say, I mean, we talk about acronyms. We just go into acronym soup and we look at all the different platforms and the different methods and metrics. So I think there needs to be some commonality there. I think what I'd really like to see is some technology that takes the SDGs and gives sort of a 3D framework that runs through all of these platforms and makes it really visible and really really tangible. I think the SDGs are probably one of the most useful frameworks that the UN has created to help everybody get their head around what sustainability actually means. Those brilliant icons, you just have to take a look at them and you understand what sustainability is. There's so many people that just don't get sustainability, but by looking at the SDGs, they can start to visualize it. So I'd really like to see some technology that takes the SDGs and places them through the heart of all of these different indices and metrics. And I know they're there, but sometimes I just think it'd be highlighted. So there's a bit of a challenge. I also think that anything that helps with transparency, blockchain is just such it's good to go when it comes to transparency and accountability. Let's see the SDGs and blockchain merge together to show what happens in supply chains and how that can come right the way through that whole investment cycle. I think that would be really, really exciting and something that we could actually do. So yeah, I think the final point I would say about technology, and I'm the wrong person to say about this. I mean, I'm still a Lego kid, right? I still like putting things together. I don't know, and we don't know what technology can do for us. So I think the other thing with technology is we've got to have that imagination. We've got to have that beyond visioning piece. We only know what we know now, but we need to go beyond that to reach the solutions that we're looking for. So another challenge there to the tech world. Help us find the solutions.
Yeah, and I think Amy may have. She's still there. I can't see her. I just wanted to say, Martin, I totally agree with that last point you made. What you kind of also just pitched our product, because we're all about data and transparency and measuring outcomes against the SDGs. But the last point on building blocks, I do think there's this sexy versus unsexy tech kind of angle where we kind of do often get so caught up in the apps and like the billion users and a couple millions of users in a couple of months type stuff. Whereas even you'll know better than anyone on this panel around the construction industry, and cement production, for example, is one of the biggest contributors to climate change. The emissions that are required to heat the kiln and then to make cement in itself with the limestone decomposition, etc. That is hard, like building blocks, as you say, Lego that kind of goes into our buildings and around the world that we need to improve from a process point of view if we're actually going to achieve a net zero world. So there's hardware, like really kind of not app stuff, but like technology that needs to be infused into those existing industrial processes, I think, if we're going to achieve what we want to achieve on the climate side. And certainly even take that example, but extend it much beyond. There's so many kind of existing practices that we've built. I mean, even the construction industry again, but wood production and sourcing and supply and deforestation and all that kind of stuff that need to be addressed and looked at from a technological point of view to see how we can adapt some really innovative ideas to improve those processes. That's not necessarily like a software solution that's going to, change the world per se. So I like that point, Martin. I just thought I'd underscore it. I think your building block piece is really valid and really important.
I might be the cynic in this round, but I do want to just always be a bit cautious when it comes to the SDGs. The Sustainable Development Goals adopted by UN member states across the world in 2015 are a good framework to actually, a good blueprint for sort of a more prosperous world, a more equitable world, hopefully peaceful world as well. But for someone who is involved in the sort of civil society, in the civil society process to actually feeding into the SDG indicators, it is such a painful process sometimes as well, just to be able to identify which metrics, which of the 169 indicators and which of the many, many targets are actually applicable to businesses operating in the space. And the sort of caveat I want to bring, the SDGs have left out quite a lot of the marginalized communities across the world. And that's sadly just a result of a lot of UN member states still criminalizing homosexuality, for example. So a lot of the provisions and services that are geared towards LGBTQ communities, for example, cannot necessarily map across the SDGs as effectively because they were not consulted and not included in the indicator framework. So to a large degree, I also want to be cautious when it comes to like, this business is contributing to SDG 3 because they are working in XYZ space. That's a great exercise and definitely helps to illustrate what impact outcomes these particular companies can have. But when it comes to actual impact measurement as well, there's just a lot more that needs to go into validating a company's impact as well more effectively. That actually translates into hard evidence that they are achieving a net positive outcome and net positive impact as well. There's a really great report that recently came out from the Net Impact. It's called the Net Impact Report by the Upright
Project.
Upright, exactly, which sort of it speaks a bit more about the different sort of impact measurement frameworks and what works and what doesn't, and actually contributing to a net positive impact as well. Yeah, just my 2 cents on this.
Thanks, Dharma. Sam, coming back to you. So we found a kind of stat that was quoted by Net Purpose that currently around 1/3 of all of the world's capital is now committed to investing sustainably or for impact. How do we increase this over the next few years?
How do we increase it? Well, to be honest, I think it's actually pretty, just to underscore that statistic, it's actually pretty high. So $90 trillion reflects both assets under management and assets owned that are signed up to UNPRI. There is about $250 trillion of capital in the world. And so that's where that 1/3 kind of comes from. But in terms of assets under management, like actively managed by investors investing in listed markets and private and others, the stat's actually higher. It's about 60 trillion out of a total of 80 trillion AUM, 80 to 90 AUM. So 60% of assets under management are committed to actually investing responsibly, sustainably, or for impact. And how to improve that number, I just think, and we kind of believe, that we need to make ESG and impact effortless for every single investor in the world. Because I think today, I mean, we've talked here about alphabet soups and how do you measure and metrics and things like that. Net profit, as a Goldman Sachs investment banker, is very simple to optimize around, right? It's kind of one number. Well, it's one number on an income statement. It has permutations through IRR, ROI, earnings per share, etc. But In essence, capitalism maximizes for returns to financial capital, which is quantified by net profit. That's really simple because for an investor, financial data feeds effortlessly through my terminal. I was educated on how to look at financial statements and how to analyze them. I'm taught when I go into a job, this is the number that I need to make sure I meet. And all my contracts are bound to like meeting that number. If we really want to make this mainstream, I think we need to make purpose essentially as effortless as profit. And I think given we're talking about a generation of investors that are quant-minded and fundamental researchers and everything, that needs to come through in the data. If we need quant data or data, whether it's quant or qual, we need to make sure, obviously, to Dharma's point, that everything is reflected, that is important for the world and for stakeholders in it. We need to kind of simplify or at least condense in some way this current wild, wild west and make that effortless. So, I mean, we're kind of trying to do that through data provision. Mm-hmm. We provide a data feed to institutional managers today that measure the outcomes of their investment portfolios in a way that's directly aligned with the Sustainable Development Goals. And that essentially we cover 10 themes. We didn't cover 25 because I think as soon as you put 25 things on a page, people are like, oh my goodness. Start with 10, which is even a lot, frankly, if we're moving from one number to 10. But they are things that people can understand, to Martin's earlier point, like clean energy generation, I mean, gender diversity. These are things that resonate with people on a personal level. And then make the data effortlessly accessible, show them how it can be built into financial models, show them what a report looks like that their clients are asking for. So with Net Purpose, you can measure your impact of your portfolio today. You don't have to take 2 years to get up the curve on this journey. Start doing it, basically. And I think that's how, to answer your question, we'll get to making this fully mainstream, is where it's effortless and also it's productive and enhances people's own job and, thought process, and shows them things that are material from a social and environmental point of view, but also from a financial point of view.
Mm-hmm. Dharma, what are your thoughts?
I mean, it's good that more data providers exist as well, and we actually see a lot of them apply to sort of B2B for our program and investment as well. There is for a lot of people, there's also different pathways. So, for example, using the B Corp, the B Impact Assessment, which is also aligned to the SDGs and has quite a rigorous set of questions, more than 200 questions, which provides you with an assessment of how you're faring and how you're performing as a company across all of the different domains. And the mere fact that you have to recertify every 3 years just also ensures that you have to do better and do good by your employees and by your wider stakeholder community as well. So that's definitely also an interesting pathway for companies to take and maybe think about long-term what sustainability and corporate responsibility looks like. And if it's companies that are younger than 12 months, because one of the sort of criteria for B Corp certified, the verifiable process is that you have to be trading for 12 months or longer. There are also different ways to sort of get a B Corp pending status, for example, which is a good sort of indicator as well. The great thing about this, that's my sort of last comment, there is a huge sort of possibility for public pressure when those B Corp companies are not performing. Hootsuite was a really good example that emerged in the last year, where one of their tech workers actually turned into a whistleblower and said Hootsuite, as a B Corp, had contracts with ICE in the US, which is a big B Corp stance that you don't work with organizations that are known for human rights violations, for example. And a lot of the public who've seen this happen actually pressured the B Labs who do the certification process into looking to the verification process again, to sort of either strip them of their status if they continue with the contracts, So public accountability is possible, which is a hugely exciting thing for consumers as well.
Thanks, Dharma. So moving to corporate governance, and importantly, what role government and policy should play in this, what needs improving, what are the best strategies for pushing more change? Martin, coming to you. So when we talk about sustainability and corporate responsibility, there's a bit of a carrot and stick approach to a certain degree. What do you see as the benefits of each approach, and how can the incentives be strengthened from the government?
I love this question. I had this one quite recently in a Cambridge Institute of Sustainability Leadership exercise I was on, and I made the point then, and I'll make it again. You know, you have carrot and stick, right? You assume carrot is for the leaders and stick is for the laggards, but actually the leaders were once laggards, and they probably needed a stick to get them going. But I actually think the leaders are the ones who should be getting the stick. The leaders are the ones who should be getting penalised, because it's the leaders who should be bringing the laggards along. And I think sometimes you need to deploy carrots and sticks in different situations, right? You need to use them like tools just to drive forward whatever it is we're trying to drive forward. I think the one thing about leadership and leader organizations is that, and a lot of these metrics that we've talked about today are about assessing individual organizations, but do we actually look to see, you know, these leading organizations that are driving this agenda, what is their influence on other organizations? What is their influence on their supply chain and their customers? Those are the areas that I think we should be measuring more, not just the metrics on the individual company, but we should be using, and the public as well. I mean, I was really interested to hear about, you know, Donnie, you talked about the B Corp there, and the way that the public can actually drive change. That's a massive stick and a carrot. You know, let's see the metrics in place to use that. So I think we do see a range of incentives and penalties from governments and regulators, but I also think some of the larger leading organizations should be they should be policing themselves more. I think with transparency and with you know, accountability and again utilizing the tech, let's find ourselves in a regulatory environment that regulates itself, and let's not focus on that being the end point. Let's focus on the end point being, how can we bring others along on this journey?
That's a really good point.
That's
and kind of talking about how we bring people along, you know, on that journey. Coming to Sam, do we need more partnerships and collaboration between businesses and government to ensure sustainability features higher up the corporate agenda over the next 5 years?
Yeah, I mean, I think this, yes, in a nutshell. But I definitely think what we're seeing here is a confluence or a collision maybe, or whatever, however elegant it's happening, between public and private worlds. Two worlds that were traditionally a bit more separate. And my former colleague Andy Cooper always used to talk about Donald Trump versus Mother Teresa. I think now we're finding this intersection in the middle, profit and purpose, that are coming together in companies. And there's so much learning that has been done by the public sector with regards to local governments and national governments, but also these global institutions, the United Nations, the World Bank. They were all established post-World Wars, frankly, to reconstruct, countries and other nations and support with international aid and development. There's so much work that's gone into impact measurement, different policy mechanisms and different financing mechanisms that hopefully we can leverage and learn from, and not reinvent the wheels. And that's also kind of what we're trying to do at Net Purpose, is not reinvent any wheels. I think the biggest opportunity for collaboration here too, though, to the carrot and stick point, is probably taxation in the longer run. Today, taxation is basically designed in one way or another to kind of redistribute some wealth and support social, environmental progress in areas that, you know, private sector capital wouldn't necessarily flow, public health systems and others. If we now have a world where companies are trying to solve those exact challenges and do it in innovative ways, there's such an opportunity to financially incentivize that through differential taxation and other things. And, we have a lot of great examples of that working and not working in subsidization and things like that. But I think that's an area that is a huge financial lever from a carrot and a stick perspective, and something that we should think hard about, I think, and put a lot of mental energy into thinking how that can evolve in a world where businesses are creating social and environmental outcomes that, governments also want to do.
Absolutely. Dharma, did you want to add something?
No, I think that's such a great point around taxation and subsidies. So just echoing 100%.
Dharma, sticking with you, how will increasing board level diversity improve the governance of an organization?
That's a good question. So board level diversity, such a tricky bit. It will definitely, I can only speak to how it works at B2B, for example. So our investment committee is comprised of women, has ethnic minority representation, so Black representation, and other sort of socioeconomic backgrounds, characteristics, who have a huge influence on the investment decisions that we bring to them as well. When it comes to sort of gender parity, for example, our entire team is at the moment comprised of 10 women, with our founder currently on paternity leave. And to what degree that has made an influence on the investment decisions that we've made in the past year as well is sort of debatable in that regard. But when it comes to board representation as well, there's huge influence to shape the strategy, to shape how people are hiring from the get-go, from entry level to higher ups. That can just influence that you bring more diverse perspectives into the boardroom as well. In our example, our investment committee, for example, has definitely had brought really great perspectives on how a company that we were putting forward for follow-on investment was including a inclusive strategy to hire into their teams. And it's always a crucial question, right? How do you retain top talent into your companies? But posed the question that the group of people they were looking to hire were quite homogeneous in their nature, quite very similar in terms of their social styles and in terms of the sort of ages, and could potentially limit the sort of market they would be able to tap into. So these types of perspectives are only brought in if you have more diversity in your board, or at least are conscious about that these type of issues can long-term impact your company's performance as well. So there are different ways to look into hiring for more diversity in boards as well. There's inclusive boards, for example, in the UK, who do an excellent job in recruiting more diverse talent into boards. And so many other initiatives that exist, which, yeah, is exciting.
And so do you see companies with good governance policies prosper over companies that don't?
Yes, there's loads and loads of data from the likes of Harvard Business Review to McKinsey to you name it that actually look into the diversity makeup of companies and stipulate they perform better and have better impact. I feel like we've gone in the past year, especially because with the rise of Black Lives Matter, after George Floyd's death as well, there's definitely been an emphasis on more diversity and representation and belonging in the UK, at least in tech and VC, which has also manifested that more people are looking to increase their diversity and inclusion more transparently as well. So a lot of the ESG conversations that are happening across VC also have a heavy emphasis on what can we do, how do we report on the sort of diversity of our portfolio companies as well. And more investors are also looking to just be able to surface level how people can break into VC, for example, and how people from underrepresented backgrounds how we can level the playing field really for underrepresented individuals.
Absolutely. And Martin, do you think that every company should have a team member solely focusing on good ESG practices?
Yes, of course. Every company should have a Martin. Absolutely. What I said when I over 10 years ago when I sat down for my interview with Canary Wharf, I'll not name the person's name as you might be watching this, but the question I was asked, what's your vision? What's the future for sustainability? And I said, well, what I'd really like to see is sustainability so embedded that I can walk away and my work will be done. And I'm still here after 10 years. There's still more to be done. So, but the point being, we should be embedding this, right? We shouldn't be having a separate team that looks after ESG and sustainability in an organization. We need some catalysts, right? We need some sort of some front runners who are going to sort of bring it in and bring all these new concepts in, and yes, bring the sustainable development goals in, but also go beyond the sustainable development goals, as Dharma says that we need to do. And I absolutely agree with that. We all need net zero carbon pathways. We all need long-term ESG strategies that really address all of the impacts. Yes, there needs to be possibly a core team that gets that underway, but then we need to see that embedded across the business, but not just across the business, as I've said before, across supply chains and embedded in customers as well. And I think it's the ESG team to be the catalyst to do that.
I really like that, being owned
but it
collectively.
needs to be owned
Such a good point.
Collectively.
I'm aware of time, so I have one more question, and it's more of suggestions.
Community.
Each of you, do you have suggestions on how companies that are lagging behind can catch up quickly to ensure that they're operating with best practice? Anyone want to take that one?
Yeah, I mean, I think, well, there's certainly enough resources out there at the moment that you can get up to speed quickly. I would start with the Sustainable Development Goals, and Dharma, I totally respect your view that it doesn't include everything, but I think at some point we've got to start getting something on a page and then iterating that as the one source of something on the page if it doesn't include everything we need it to today. If you're operating in, I mean, there's also a lot of resources around the SDGs about how they implemented or implementable in different sectors. And as Martin said before, there are industry associations in individual sectors that will have views on this topic. I think it's so mainstream at the moment that there will be guidance and pathways as to what the cement industry should do. There is with the Cement Industry Association, the Sustainable Pathway, Sustainable Food, air, clean energy, the International Energy Agency, for example. We're actually housing all these resources and opening that up soon on our site. But in the interim, there are a lot of resources anchored on the SDGs that can help people get up to speed. So I don't kind of feel like it has to be, I'm a laggard, I don't know where to start, I don't start. You can start, like go and have a look at what you could be doing. Look at the leaders, who you think are the leaders, and see what they're doing and just start making steps. And I don't think you have to have everything done tomorrow, right? Like I think it's about making dedicated steps and identifying the biggest, opportunities in your business that can really make a difference. It sounds generic, but I think with industry resources, there are tangible ways to make that happen today.
We actually have a question from the audience that kind of touches on a few of those points as well. So the question is, what are some ESG actions or initiatives that SMEs could participate or contribute to, given their limited resources?
You got the B Lab thing, Dharma.
Yeah,
I guess.
Yeah, definitely. Sort of the individual companies, if they want to also just see how they're performing across all of the different dimensions, including sort of SDGs as well as ESG concerns and good governance, can just log into the B Impact Assessment portal and just download the questionnaire without actually doing it and committing to doing it. And just, it's a really good exercise. It is 200 plus questions, so it's a long exercise. But it's a good sort of company health check in which domains you maybe want to focus on and just do that step by step. But in terms of the different initiatives SMEs could participate in, Sifted have published a really good article just debunking what sort of ESG initiatives are currently happening in this sort of space. So definitely have a read where they talk about the different ESG initiatives led by different VCs, and there are different pathways to participate in those as sort of testing the different frameworks as well that are being developed at the moment. there are different resources and tools. If you, for example, want to focus just on your product and your technology and stress test them around mitigating quite huge harmful risks, unintended or intended. There's the consequence scanning toolkit, which was developed by .everyone and lives on the Ada Institute website, I believe. Media Network have developed a really great toolkit called the Ethical Explorer, which sort of built on their ethical OS. So how do you have a operating system as a company that just is ethical and responsible? So there are loads and loads of resources available. We've got a list of different resources on our Tech for Good Global site. So if you go to techforgood.global and then check into the sort of knowledge base, there's a whole directory of companies that can help you, as well as just different resources listed on there.
Brilliant, thank you. Martin, any final suggestions from you?
Yeah, I can't add to that list of brilliant resources from Dharma. What I would say, I'm going to say two things. Number one, don't do it alone, right? This is not a solo sport. You've got to collaborate. You've got to pair up with people. You've got to join forces. Join forces with the usual suspects, right? Join forces with your friends and your allies, but also join forces with the unusual suspects. Form alliances and form teams and form collaborations with people who you know and people who you don't know. You've really got to do that to tackle sustainability. So look for partnerships. One thing I'll say in terms of resources, if you are a built environment SME, please go to Supply Chain Sustainability School. They have a whole bunch of free resources, training, toolkits,
wonderful. Thank you so much. Well, I think we are out of time. We are out of questions as well. I think there's been some incredible practical tips there, resources that people can tap into. But certainly my takeaways are ESG must be embedded across business, across supply chain, and collaboration is certainly key. So thank you so much for joining us today, Martin, Dharma, and Sam. Really appreciate it. It's been a fantastic discussion. I'm sure there'll be, if not questions directly after, people will be connecting with you through LinkedIn and the likes as well. But thank you so much. And to everyone that is watching, thank you for spending the last hour with us. And if you would like to stay on the platform to virtual network after this, you are absolutely welcome to do so. And hope to see a lot of you in person again in the not too distant future. Thank you very much.
Thanks for having us.
Thanks, Amy, for having us. Thanks. Nice to meet you, Dharma, Martin.
Okay. Thanks, everyone. Thanks very much. Bye. Bye.